Asia markets rose as investors assessed China's business activity data, with Japan's Nikkei reversing course to log gains after the country's central bank raised benchmark interest rates. More big tech earnings loom, with Facebook parent Meta Platforms slated for today and Amazon and Apple due to report tomorrow. However, Microsoft's earnings yesterday disappointed investors. Growth in its main cloud computing business missed expectations, although overall sales and profit growth topped forecasts. Locally, retailer Woolworths expects to report a decline of up to 32% in earnings on weak sales as higher living costs continue to weigh on discretionary spend. Oil rebounded more than 1%, rather more than $1 a barrel, after the killing of a Hamas leader in Iran intensified tensions in the Middle East, but prices remain under pressure from concerns about weak China demand. Looking at the all-share index, that's up 1.6%. Financials are up in positive territory, nearly 1.2%. Industrials also in positive territory, 1.1%, with the resources there taking the lead, up 3.8%. Looking at the currency picture, the rand is trading at 18.19 to the dollar, 19.71 to the euro, and 23 rand 36 to the pound. To help us make sense of the market picture, we are joined by Chantal Marks, who is from F&B Wealth and Investment. Chantal, thank you so much for your time. So today we're waiting for that FOMC decision. We're still in the middle of big tech earnings, and at the same time, we've kickstarted the Asian picture with a move by the Bank of Japan. When you look at what's happening with our local market, it's green across the board. So what's driving that?
Well, I think in part it is due to global developments. We have seen a pretty decent start to trading today out of Asia, as well as in Europe, and the futures market in the US is also looking up. So there definitely is an element of global influence. But I also see that the resources sector is particularly strong. So gold mine is performing quite well. The gold price increasing because of increased tensions in the Middle East, and then also the platinum mine is getting a little bit of a bid. So resources generally also supportive, and then we can't forget about the SA Inc. stable. The last few weeks has been really positive for the SA Inc. stable, and we continue to see some good gains there.
Okay, so we had a trading update from Woolworths earlier today. What do you take out of it to give us a sense of what is going on when it comes to consumer spend, especially in that middle income, upper market segment?
Well, it just feels like more of the same from a Woolies perspective. So we've seen some really solid growth in the food business. They continue to make inroads in terms of market share gains. So from that perspective, I think you'd think that consumer is quite healthy, still preferring to purchase at Woolies and purchasing more food at Woolworths Food. But when it comes to the fashion, beauty and home business, I think that is more a function of getting things wrong from a fashionability perspective. Perhaps people going to Woolworths to rather buy food than to pick up a new blouse or a new skirt. And then I think it's a little bit more discretionary in nature. So because we're kind of at the end of a high interest rate cycle, or the higher end of the interest rate cycle, people are quite strained. So while they're willing to still spend money and more money on food, perhaps they're second guessing their decisions in terms of clothing. One can also argue that the competition in clothing in that middle to high income space is a lot more substantial than it would be in the food space. In the food space, you're really only competing with very strong spa businesses, as well as the likes of a Checkers. Whereas in the clothing business, you are competing with all these global brands in South Africa as well, and now more recently importers.
Okay, so if you're to consider everything that's happening in the environment right now, market-wise, what would you say is the main theme for the market so far?
The main theme for the market so far is everything matters. That's what it feels like at this point in time, because as you mentioned in your introduction, I mean, there's just so much going on. It's the FOMC, it's the Bank of Japan moving, it's tech earnings, it's local factors such as less load shedding, an improvement in railway, perhaps further structural reforms, the settling of the elections. We're thinking about the US elections into the end of the year. We also have big global wars going on that could be disruptive from a supply chain perspective, particularly when we're thinking about oil, and could dictate the direction of the gold price along with interest rate movements. So I think everything matters at this point in time, and that would be the predominant theme, which probably is a better way of saying there is really no one big theme.
Okay, so later this evening, we're expecting that FOMC decision, and we'll have Jay Powell speak in front of the media at the press conference. What do you want to hear, and what do you think he's going to emphasize?
So what we would want to hear is a little more, probably him being a little bit more specific around what we can expect in September, because right now a September cut by the Fed is priced in by the market and is widely expected. So we want to know whether or not that cut could actually come through, if they're kind of thinking about it in the same way that the market is. My sense is, though, that he will keep his cards quite close to his chest, and I think that there's a risk that the market reacts negatively if he doesn't say anything about it.
Just quickly, before I let you go, if you had to de-risk out of the Mag 7, which sectors would you go into?
So outside of the Mag 7, I would actually within the US, I would look at the kind of hardcore industrial stocks, interest rate sensitives, probably at the consumer stocks that have been quite beaten down now that we're heading towards the end of the interest rate hiking cycle. And then I'd also look to diversify outside of the US. I think there's still quite a lot of value in Europe. There's quite a lot of value in China right now as well. And then closer to home, I still think that there's a lot of value in areas that we understand quite well and companies that we understand quite well. So I would probably de-risk by bringing money back home.
All right, Chantal, let's leave it there. Thank you so much for your time. That is Chantal Marks from FNB Wealth and Investment.